Right now, the crypto markets are still catching their breath after a tough drop in the prices. And there's one project that often flies under the radar compared to Bitcoin or Ethereum, but it's quietly building important things behind the scenes. That's Chainlink. In this video, we'll look at the project's current status and why it matters, check out its fundamentals, study the charts, and put Chainlink into the broader macro picture. Then we'll share some scenarios for Link's price in 2026 and finish with a simple trading plan. By the end, you will have a clear sense of where crypto's leading oracle stands heading into 2026. Let's dive in, guys. This is not a financial advice, always do your own research. Chainlink is currently trading around $8.75 per token. Its market capitalization is roughly $6 billion, making it around the 15th largest crypto by market cap. 2026 started well for Chainlink. It gained 17% in 2 weeks' time, but then the price started crashing and now it's down 40%. On top of that, the 2021 all-time high seems like a distant memory as Link is 83% below it. In other words, it's a big discount to previous highs. Now let's see the fundamentals on Chainlink. It is a decentralized oracle network. In simple terms, it connects blockchains with real-world data. Smart contracts on Ethereum and other chains need reliable external data to work well, like price feeds, interest rates, weather data, etc. Chainlink's network of node operators fetches that data from many sources, aggregates it, and delivers it to smart contracts. Because of this, many DeFi apps rely on Chainlink to secure accurate data. For example, Polymarket has integrated Chainlink's decentralized oracle technology, specifically Chainlink data streams and Chainlink automation on the Polygon mainnet. These oracles feed real-world data like crypto asset prices into Polymarket's smart contracts and automate on-chain market settlement. Overall, the project of our focus today is widely used in the crypto ecosystem. It secures a large portion of DeFi. For example, many DeFi protocols on Ethereum use Chainlink price feeds. In a way, it has become almost an industry standard for on-chain data. This isn't all though. Big financial and tech firms have integrated Chainlink too. For instance, Mastercard and Chainlink teamed up so that 3 billion Mastercard holders can buy crypto on-chain via a Chainlink-powered app. Other partners include UBS, Swift, JPMorgan, Euroclear, and even Google, where Google Cloud actually offers Chainlink data. In fact, industry reports described how Chainlink's infrastructure is being positioned as a bridge for as many as 11,000 banks to get direct access to blockchain networks for settlement and tokenized assets. The project has started programs to support its tokenomics as well. In 2025, it launched the Chainlink Reserve, an on-chain reserve that uses revenue from enterprise services to buy Link off the market. This effectively removes Link from circulation and could support the price over time. So the question is not whether Chainlink has real-world utility. The real question is whether that utility will ever translate into sustained price appreciation for the token. Now let us look at the chart. The daily trend is negative and the token is trading under a falling trend line that has been in place since August. Notably, the price is now on a support level which has been tested many times before as support and resistance. Now, the daily RSI shows that Link is oversold at this level, which means that sellers are getting exhausted and buyers might step in and push the price higher. This has happened multiple times before, as we can see here on the chart. And if the price pumps from this level, the reasonable short-term target would be the 618 Fibonacci level, which comes at around $20. However, if the price fails to hold this level, the next support zone comes at around $4.5 to $5.5. This would be another drop of around 40% to the downside. Looking at the bigger macro picture, it tells us what fuel might power crypto and Chainlink in 2026. Here are the key macro factors. First, PMI and economy. The US manufacturing PMI, which is a leading indicator of factory activity, surprised to the upside at 52.6 in February 2026. That reading is above the 50 mark, which many interpret as imminent expansion. Historically speaking, whenever we have had a PMI above 50, it has always led a rally in the crypto market. So the favorable PMI data is a tailwind. However, it's just one factor of several. By itself, it will not trigger a crypto rally, but it sets a better stage than outright contraction. See, crypto markets often need easy money to run up. This means Fed rate cuts or quantitative easing, or in simple terms, Fed printing money. However, Trump's pick, Kevin Walsh, is known for being hawkish. What I mean by that is that historically Walsh has actually opposed QE when he was in the Fed, so he seems pretty cautious. On the other hand though, the Fed chairman nominee is now expected to cooperate with Trump. Why would he be picked otherwise? So some analysts think he will still cut rates and be slow to tighten. In short, no one is guaranteed QE soon. So if the Fed stays tight, crypto upside is limited. But if the Fed shifts to cut rates and revive QE, that could flood money into the crypto market. Bottom line, for 2026, the broad market needs two things to get really bullish. One, continued economic expansion. PMI above 50 is a good start already. And two, fresh Fed stimulus. Either rate cuts or QE. We see the PMI is okay now, yes, but fresh QE is far from certain with Walsh at the helm. If QE does come though, we'll see big upside. If not, expect more moderate prices, guys. Let's consider two broad scenarios for 2026 now, based on how the above factors play out with some math. First, the bullish scenario. Suppose the economy keeps expanding and the Fed does resume aggressive easing, QE. In this case, the crypto total market cap could boom. Some analysts even predict the next bull run could push the crypto market to $8, even $9 trillion. And if that happens, even mid-cap coins can skyrocket. Let's apply that to Chainlink. Now, the other factor we need is Link's market dominance. Previously, it has reached the peak at just under 2%, and right now it's at only 0.26%. Now, the hypothesis A here states that Link gets 1% from the total market cap, and that brings the token's market cap to $90 billion. The price then reaches around $125 a piece. But what if Chainlink gets a bigger piece of the pie? Hypothesis B allocates 2% of the total market cap to Link. In such case, the project's market hits $180 billion and the price for a single token goes to $250. So, under the optimistic macro tailwinds, Chainlink could see prices well into the triple digits. In my view, a price over $100 is plausible only if the entire crypto market rallies strongly above $8 trillion, with Chainlink regaining a major share of it. Now, we cannot be too careless, as we must consider a bearish scenario too. Imagine that the PMI is just barely expansionary, the Fed is slow to ease, and global liquidity stays limited. In this scenario, the riskier assets like crypto could keep dropping, and Link could fall another 40% to its next solid support at around $5. To summarize, I would say that with strong Fed liquidity and growth, Link could easily reach or exceed $100. But without it, a range around $5 is more realistic. The actual outcome will depend on macro and crypto market sentiment, so we'll be watching those clues all year. If you want a rough trading plan, here's one approach. Remember, this is not advice, just my take on things. I would accumulate Link at the current support, and if the market drops 40% to its next support, that would be another great zone to accumulate. And I'll tell you where I plan to execute my trades. CoinEx is my platform of choice, and right now, you can get $25 bonus if you register from the link in the description. CoinEx is a proper crypto exchange with almost 10 years of experience where you can trade Link or any other 1,000 tokens on spot or leverage, longs and shorts. The platform is very easy to use, so go sign up for CoinEx from the link in the description, get trading and get your $25 for free now. With regards to taking profit, I would sell 20% at around $20 to secure some profit, yeah. The next target would be the previous all-time high at $50, where another 30% of my Link holdings go. The third TP level would be the first bullish target at $125, and here I would offload another 30%. And after that point, I hodl the final 20% till at least $250. See, this is my view, and you most definitely should adjust your targets based on your own outlook of the market, your risk profile, and of course, by always applying solid risk management. To wrap up, Chainlink has solid fundamentals and big partnerships behind it, but it's living in the shadow of a tough market. Its price action in 2026 will depend largely on macro factors. We actually saw that currently Link is quite cheap relative to its all-time high, and technicals show it's at a key support zone with all the sold signals. In the best case, Link could go to $250. In the worst case, it may drop to $5. Let me know in the comments if you agree with this price prediction, and if not, what's your own take on it with actual numbers? Thanks for watching, guys. I'll see you next time. Ciao.